Hey guys, so in today's video, I wanted to break down this ICT inspired order block trading strategy that I've personally been using in order to not only get funded, but in order to also get payouts from prop firms. Now, this trade right here is something that I took along with the community that I sent into our Discord this morning. And as you can see, I said GJ sell limit, and that was the sell limit right here. As you can see, it was a perfect tap with the minimalist of drawdowns and a nice and steady race all the way down to the take profit. As you can see, this was a 1-to-7 risk to reward trade, which means for every $1,000 that was risk, the reward was $7,000. Now, to put that into perspective, $7,000 is life-changing money, right? That's 7% on a 100k funded account, which means I will now be able to withdraw $7,000 from my prop firm account. Guys, I just wanted to take a minute of your time in order to let you know about prop firm passing. Now, the reason why I've decided to partner up with this company is because I've used them in the past before, and these guys are legit. They're super fast, super reliable, and they have very competitive prices in order for you to get your account passed. Now, jump in at Discord. I'll leave a link in the description below. They have a bunch of different prop firms that they can actually work with in order to pass the account and get you funded. And they have very competitive prices. So let them know that I've sent you, let them know that CEO Trade has sent you, and they can potentially get you a better rate or a bigger discount. But these guys are legit. And to top it all off, I think today they actually posted that they actually pay £50 per referral, and they have all of this documented in their Telegram channel. So I'll leave a link in the description below. They're super fast. They can pass your account on the same day. If you guys are interested in getting your prop firm accounts passed, please go down, click the link in the bio and hit these guys up. They are the real deal. Now, as I said, this was sent into the Discord, and if you're not in the Discord already, I will leave a link in the description for you to be able to join. Right, so let's get straight into this trading strategy so that you guys can understand why exactly I took this trade. So the first thing that we do is we come onto the higher time frame so that we can understand our directional bias. So as we can see, GBP JPY was creating a series of lower highs, lower lows, lower high, lower low, lower high, lower low, lower high, lower low, right? Therefore, from our understanding of structure, we know that after a lower low is formed, we get a lower high, a lower low, and then we get a lower high, right? So if I replay this bit of price action right here, we can see that we actually created a lower low, a lower high, and now we've just created a lower low. Therefore, we now know that we need to come up to create a lower high in order for us to get a lower low, right? So after we understand where market structure is on the higher time frame, we can then start framing up a higher quality trade, because we now know that price needs to come to some sort of area in the market where it will create that lower high before giving us the lower low. Therefore, we're now looking for sell positions, but where do we look for these sell positions? So we look for sell positions in areas that are referred to as order blocks. So this is an area where price has been engineered, taken out some liquidity, and has gone the opposite way, right? So for you to be able to see this on a more clearer spectrum, I first have to drop down to the lower time frame. So can we see right here that we got this sort of price action? We got a higher high, higher low, higher high, higher low, and then we got a higher high which took out this liquidity right here before going in the opposite direction, which means we took out this low, changing the market structure. Now, this area of price right here was engineered because, as we can see, this bit of liquidity was left. Price then came, took out that liquidity and went the opposite direction. Therefore, this push up to take out this liquidity was an area where price was engineered to go so that the banks and institutions could execute their orders going the opposite way. So now we know that because price has been pushed this way, the banks and institutions have to return to this area in order to close their positions and open more positions, right? So now we've now identified an area in the market that price can potentially come back up to. So this is how we start framing a high quality trade. So what do we do next? We then drop down to the 15-minute and we see if we can refine this area. So what I like to do is I like to use this fixed range volume profile tool. What this does is you take this bit of price action, and so we know that price is magnetized to this area, right? So now what do? We've identified our higher time frame directional bias. We've identified a key area in the market that we feel like price will return to. So the next thing we do is we simply go down to the 1 minute, as that is our entry time frame, and we wait for price to come back to potentially give us an entry. Now, as you can see, I said potentially. Now, the reason why I said potentially is because we know price is going to do what it wants to regardless. We just want to follow price. We don't want to try and force price, right? We don't want to say it has to go down from here. We just want to see what price does, and we want to react. So as you can see, we have our first tap into this area. Now, I go by ICT's power of 3 concept, which means that we want to see 3 pushes or 3 drives into this area before we actually look for an entry. Now, as you can see, there's our first drive, there's our second drive, and there's our third drive. Now, as you can see, this third drive that we got actually pushed up in order to take the liquidity out that was resting above, inducing buyers into the market who are thinking this has now broken above, which means it must go up, right? So then what does price do? It comes back just a little bit, retest this area, giving more confluence to the buyers, enticing them further into the market. And then what does it do? Bang. It takes out everyone that was buying, taking away all of this liquidity, and then it continues going forward. So now that we know that there is a market structure shift where we've gone from higher high, higher low, higher high to a lower low, we know that we need a lower high before a lower low continue lower. So we identify our next key area of price, which is this order block right here, because this is the order block that not only took liquidity, but it broke price to the opposite direction. So we know that this is a high confluence area where price was engineered to break through this resistance zone and take the liquidity down. So we mark this out, we put our sell limit right here, we put our stop loss just above because we know that this is now a protected high, and we put our take profit at the opposing liquidity. Now, where is the opposing liquidity? The opposing liquidity is at the opposite order block, which is right here. Now, the reason for this is because, again, as you can see, the same fractal nature that happened up here also happened down here. We had this engineered price, which was swept right here, and then price pushed the opposite way. So the exact same fractal nature that happened right here is the exact same fractal nature that happened down here, which means this is a high confluence area where price can come back into before deciding whether to go back up or continue further down. So we've got our entry, we've got our stop loss, and we've got our targets. Now we enter the trade, or as I said in here, I said we have the sell limit placed, and now we simply just wait. We wait for price to do what it wants to do, and as you can see, all it simply did is run straight to the target. So I told everyone to get out of the markets somewhere around here and bank 3%, and that was because the Bank of England Governor Bailey speaking about inflation, so I didn't want to risk anything, so I told everyone to get out here at 3%. However, I held the trade on my personal account, which ran all the way down to 7% in profit. Now, That is an absolutely picture perfect trade that was marked out to perfection. We identified our key areas in the market. We waited for price to come up, take out the liquidity, give us the market structure shift, and we got back in where there was a high confluence area. So this trade was beautifully framed, perfectly executed, and managed all the way down to the take profit. So I hope you guys got some insight into exactly how it is that I take this trade, how it is that I mark up high confluence areas of interest in the market. If you did, please don't forget to leave a like, comment, and subscribe. And I will see you guys in the next video. Take care, guys.